Hi, welcome to Market Alert for Friday the 17th of February 2017. So yesterday the market put in a sell signal initially. The market traded down to the 20,600 level. And the reason I'm showing you the live chart on this, I just want to bring something to your attention. We know that the market's a buy market, and we can see the market's struggling here. We've got 8.5 points on the table. We're looking for the market to break the 20,600 level. It's going to speed things up a bit. Market then puts in the buy signal. Let's go a bit further than this, and then eventually breaks it. Now, what you've got to watch here is the volume. I just want to point something out to you, because you've got this drop off in volume. If the market's going to go lower in the sellings in the market, then you want to see it increase. But what you'll see as we go forward is the volume actually starts to increase and the price doesn't actually move lower. It starts to bounce, and at this point here you can see how it's starting to bounce, and you've got an increase in the volume there as well. So going forward a bit more, you'll see the market then put this big spike in volume, and they've bought back the market. That's exactly what they do. We're at a major support level there. They don't want the market lower, and then the market's brought back. So you have a chance at this level here, as you start to see the volume building and trading back to this level, because we know it's been a buyer's market, to actually get out with a profit on the actual trade. So then we have a buy signal after the market's traded sideways a bit more, gave you a chance still to take money off the table, and then eventually it goes through. Now at this point everything's going swimmingly until, I'll just pick this up here, this news hits the market. Meet the man behind the market's relentless ramp. This is released into the markets, and as night follows day, it gives the excuse for the market to be forced down and to take out the stops. And once that objective is achieved, you can see there's a bit of selling there. Again, the market's brought back, and we see the market then trade sideways for the rest of the session there, with no signals being filled. And then we're getting late into the actual session. There was one towards the end, which you can see there, but we were just close to the end of the trading session there. That was at 8:30, and as the market's been sideways and quiet, not really worth it. And on the overnight, if you look at the full picture, you'll see the market didn't do anything with that either. It just went through for a bit, and then eventually came back down again, and now is currently sideways. So we've got a situation where the market took out the second trade sideways after that, purely on news. They needed something just to shake out a few of the longs, and it worked a treat. And that is indicative of a market that is getting close to the top of its activity as well. There you can see even a massive increase in the tick volume for yesterday, and the market's making no progress. The market's slightly sideways to lower today as well, again giving clues that this market is starting to actually struggle on the upside. News wise, we've got retail sales out at 9:30 a.m. That's for the UK. There's absolutely nothing after this. It's Friday. The market could be sideways, or it could be heavily to the downside as the market starts to unravel, but probably not just yet. They want to keep the market moving to the upside and sideways. It's a churning effect that they're looking for. And other news before we get into the implied volatility: auto loans delinquencies, subprime delinquencies soar. This is on automobiles. You only have to look at the UK for the same thing. We've got that many new cars on the road in the last few years. Cheap finance, easy credit, and you can see there that the US now delinquencies, that's people unable to pay or repay on the cars, actually increasing significantly. There's also another article which I wanted to look at here as well, if I can just find it, and that was a news article by the Fed saying that the banks are still undercapitalized. It's here somewhere. Oh, there's another one as well there. Household debt rose to 12.6 trillion, the biggest jump in a decade, and then people tell me everything's fine. Fed president admits US banks have only half the equity they need, and that's again what caused the problems in 2008. So it's certainly going to be interesting to see how this starts to unfold, as we've got the implied volatility moving back down from 931 to 916, which again is indicative of the market wanting to continue sideways to higher, unless again something comes out of the blue that moves the market to the downside today. But otherwise we've got this situation of the market maintaining that sideways move there. Right, that's it. So let's hope today's better day volatility wise, but it is Friday and they can be quiet as it is, and there's no news as well. So we'll see what how it pans out in the pre-market session in the first hour. Right, that's it from me. I will speak to you later on today. Other than that, see you in Monday's Market Alert. As ever, thanks for watching. See you in the next one.